Chapter 8, Part E, question number 24. Current assets on the financial statement of a business include land, rent receivable, real property at its historic cost, accounts payable. What do you think? Rent receivable. And the land is a fixed asset, not a current, right? So it's number 2. Then 25. Which one of the following is not a depreciable asset? Septic tank, it's a depreciable. 50 acre of fallow land mean not cultivated for 1 year at least. Carpeting is also. The concrete patio is also. So which one is not? 2. Yeah. So it's number 2. Then we go to the question number 27. Which one of the following is a liability on a financial statement? Accumulated depreciation, mortgage is payable, wages paid, prepaid expense is number 2, mortgage payable. Anything payable is a depreciation, is a liability. And then we go to the question number, after 27 is? Which one? 31. So go to 31. Which of the following is a liability on a financial statement? Number 1, accumulated and depreciation. Inventory is a receivable. Rent receivable is a receivable. None of the above is the answer, number 4. Then the question number 33. Yeah, 33 is a calculation, right? So, yeah, what is the amount of Ms. Jappi capital account? So what you need to do, you need to add all the assets. Asset is 1250 cash, 4750 account payable, the receivable, inventory 69,000, land 32,000, then building minus depreciation. So 94,000 minus 15,600. I think it comes to 79,000 something, right? On the right side you write. Add all of them. When you add all of them, what is the total? What is the total come? You know that? Yeah, so the total comes is 185,900. Total asset is 185,900. And on the asset side is also 185, right? Then you add the liabilities. So liability 2,900 plus 89,450. That becomes 92,350, right? So write there 92,350 on total liabilities. Then you subtract asset minus the liabilities. You will find Ms. Jappi's capital is 93,550. So write down 93,550 there, where it says Ms. Jappi's capital. Then the total liabilities and owner's equity. So what should be then? Is equal to the asset, right? 185,900. So your total liabilities and owner's equity will always be equal to total assets. I'll give you example. If I own this gas station and gas station is worth $3 million, I have a debt of 2.9 million, right? And my equity is how much? 100,000, right? Right? If I add my equity plus my liability, it will be equal to the total assets. So the total asset is $3 million, right? So if you add liabilities plus equity again, it will be always equal to the total assets. Do you understand or not? If I own the gas station, is worth $3 million, I have a mortgage of $2.9 million. And JB's capital is how much? $100,000, right? So if you add them together, it says total liabilities and owner's equity. So 2.9 plus $100,000 will always be equal to total assets. So which is $3 million. Or you can take the example of your own car. If you have a car, $50,000 car, right? And you have only $1,000 from your pocket there, right? So what is your equity? $1,000. 49,000 plus 1,000, right? Which is equal to $50,000. So basically, so you know, and this mostly comes in the exam. Okay? So what should be the answer? Is the number? Number 1, 93,550.
Assets minus liability.
Hmm?
Assets minus liability.
Yeah, asset minus liability is equal to your equity, right? And what's the time? So we have 2 minutes. Okay. And then we go to the question number 34, right? Yeah, 34 also in this one. Ms. Jappy's capital account balance may not be true reflection of initial equity invested plus the accumulated net income of the mountain bike emporium since it went into operation. So highlight, not a true reflection. So this mountain bike emporium, as emporium company, if you read the statement first in the beginning, it says the mountain bike emporium, highlight, it says Ms. Jappy sole proprietor. Highlight sole proprietor. It means he's a single owner, right? It's not a corporation. He's a single owner. So does he pay dividends? No. Who pays the dividend if it's a corporation? He is a single owner, like us, right? So he cannot declare dividend. You can only declare dividend if it's a corporation, right? So we have to find the answers. Number 1, the sole proprietor has paid income tax over time. Number 2, Ms. Jappy may have declared and paid out dividends. So that's wrong, right? So he can't declare dividends. Ms. Jappy may have made withdrawal from the Ms. Jappy's capital account over time. Is that right? And the sole proprietorship has paid income taxes over time. Who pays tax? Sole proprietor, not proprietorship. Owner pays taxes, not the ownership. So that's why it's wrong. But we're looking for wrong here, right? Right? Which is question 55, yeah. So what are we looking here actually? True? True or false? Yeah, true reflection. So basically,
Not be a true reflection.
yeah. So it's yeah. So the number 1 can't be right. So it's the number 3. Ms. Jappy may have made withdrawals from the Jappy's capital accounts over time. So basically, so when you take the money out, right, it is not the true reflection. Okay? So basically, for example, I start a business, right? I start a business. I use my own $100,000 to open a pizza store. So do I pay taxes on that? No. I pay taxes what income I earned with that $100,000. If I make $20,000 first month, I pay taxes on that $20,000. I don't pay on that as $100,000. That's already earned income. You understand, right? And a single owner, I don't declare the dividends because it's not a corporation. So it's number 3. I think that's it for this part.